Good afternoon, ladies and gentlemen. Welcome to our next webinar in the Admiral Markets Trading Spotlight series. And today we're going to talk about top trading ideas for 2020. My name's Paul Wallace. I'll be your host. We're going to cover some fascinating ideas that might give you some food for thought for opportunities that may set up in the 2020 area. It'll also, as we link into the live markets at the end of the slide demonstration, if you yourselves joining us here today, if you have any particular instruments that you might like us to have a quick look at, then I'll be happy to do so. So what I'm going to talk about today, well, we're going to start with a little bit of a recap of 2019 in the markets. It's been a fascinating year, okay? There's been some amazing moves there, and we just want to have a look at and see what can we learn from that. And in particular, talking about, how have markets changed, okay? What have we seen happening in 2019? And, not surprisingly, what position does this put us in for 2020? I'm going to talk about a few sort of top trading ideas, okay, some markets and some potential trades. As I said, that give you some idea what you could start to look at, start to build a sort of trading plan for 2020, and it'll also sort of link in with some of the other fantastic resources that Admiral Markets are providing for traders to help them with their forming their own trading plan for 2020. And then what we'll do is, we'll have a little look at live markets. We'll have a look at a few of the charts that we've talked about in our session here. And if there's something that particularly you might like to have a quick look at, then we might have a few moments to do so if you're joining us here on the live session. And as always, for those of you who are joining us regularly, we appreciate that you're always interested to get further support from ourselves here at Admiral Markets, and also from the kind of wider trading community. And that's why, we sort of encourage you to join the trading spotlight community on tradersyard.com. You'll find that I'll be in there after this session for the rest of the afternoon. I'll be there to answer any of your particular trading questions. So you can register at tradersyard.com and you can join the trading spotlight group at tradersyard.com/group/312. And you'll find that my Admiral Markets colleague will put a link up there into the chat box that will help you sort of join those sessions and sort of get the additional support that all traders are looking crave for. So, for those who don't know me, my name's Paul Wallace. I've traded for many years, and I coach traders for about 10 years as well. Primarily, I look to trade dominant trends for my swing and position trades, and be a mean reversion trader for my intraday trades. And in terms of, we're here representing Admiral Markets. As you can see there, Admiral Markets is regulated and authorized across several entities across the globe, and they provide competitive spreads on very popular trading instruments. And if you wish to know more about how the Admiral Markets help you, then please get in touch with your account representative, and they'll be happy to provide you with some guidance. But today, what we want to focus on is looking at, what are our top trading ideas for 2020. And as I said, if there's something here that you're particularly interested in, just pop it in the chat box there. We'll be happy to take a little bit of a look at it as we go through our session here. But as you can see there, we said, this year, 2019, has been a fascinating one for financial markets. All right, with many twists and turns, often provided by the kind of geopolitical situations that we find ourselves. But what we're trying to get across to traders that such moves, they provide either a threat or an opportunity for traders based upon their education, their experience, and their risk profile. And 2020 will continue to provide twists and turns in the economy and the overall geopolitical scene. So what today, we want to continue the theme, the overall theme of the Trading Spotlight series by providing you with some education and insight that allows you to engage in markets in 2020 from a perspective of opportunity rather than threat. And if you're watching this on our YouTube channel or on the Facebook page after the live session, maybe you've got particular ideas or insights yourselves into how markets maneuvered themselves this year, or how you feel they may move next year. Please feel free to sort of drop that in the comments box. We really appreciate it. We really always fascinated, interesting. It might be something that we ourselves might want to sort of look at and cover for you in one of our future sessions. We're always interested in in fascinating ideas for the Trading Spotlight series. So, 2019, as I said, it was a fascinating year. Lots of twists and turns in the way the markets happened and how they moved. And, what we saw there for the majority of 2019 was, continued Brexit delay and confusion. Okay, and I think most of us, certainly here in the UK, Brexit has been done to death in many senses. But as traders, it's an important thing because it has moved markets very often in sort of knee-jerk, impulsive style. But also as markets have started to price in the likelihood of future eventualities, then that has been reflected in share price. Well, share prices, but primarily FX prices, and that provides, once again, it's either a threat or an opportunity based upon your on where you stand. Well, what we've had is political election in the UK, and we had that here last Thursday. Okay, on there you go, Thursday. There it was on the sort of the 12th of December, and most of you will now know that invariably that was a very convincing victory for Mr. Johnson and the Conservative Party, and we'll look at that. We'll look at that in a few slides' time, because invariably that will have an impact upon sterling and also the FTSE. The real big deal, okay, for this year has been the ongoing saga, and I think saga is the right word, regarding the kind of US-China trade deal. President Xi and President Trump, and it really has been a year of kind of seesawing there. Okay, it's been real yo-yos there as sort of a deal is on, a deal is off, a deal is on, and all of that kind of confusion, all of that kind of obfuscation, delay, ambiguity, that has an impact in markets. So, we believe that, now as we're speaking here, that kind of, phase one of the trade deal is pretty much good to go, and it just needs to be signed off. There is no particular, at this moment, no particular sort of time schedule for the phase two of the talks, but even if they can get phase one sort of completed, that will actually have a little bit of an impact. And as I said, we will look at that in a bit more depth when we look at the live market. So stick with us, as we'll be, as I said, looking at the live markets and the reflection upon that later on in this particular session. We've also had the Hong Kong riots. Okay, that has been going on went on for about 3 to 6 months there, and actually had quite an impact on markets in terms of the Hong Kong markets themselves, but also the sort of the kind of geopolitical view of China in total, and that had a knock-on impact onto Hong Kong markets and the Hang Seng index as well. What we also saw is that we've seen, despite all of that kind of ambiguity between Mr. Trump and President Xi, is that US markets have pushed themselves to all-time highs. Okay, and that's something we'll look at in detail in a few slides. But that has just been something to fascinating to sort of watch and to see that despite all of the, let's say, the geopolitical confusion that might have been emanating around the world, that actually that hasn't prevented US markets from pushing to all-time highs. We also saw a rebound in some of the cryptocurrencies. Certainly not to the levels that we saw in sort of late 2017, but we certainly saw a rebound in some of the major cryptocurrencies. Admittedly, they have kind of faded away a little bit over the last month or two, but that's something we can have a little look at in a moment when we look at the live markets. And we also had some moves in gold. Okay, as that kind of initially linked into fears about the US-China trade deal, fears about even there was fears about war in the Persian Gulf, when there was difficulties between Iran and the US, and whether that would spill over into sort of a physical conflict. Okay, so there's I've touched on some of the kind of major points that we had in 2019. There were still a whole host of other points that I haven't commented on there, but they all had this impact on moving markets. Okay, they just, as I said, either in kind of very quick, fast, impulsive reactions to pieces of news, or invariably, sort of changes in trends as markets started to price in what they believed were the likely eventualities from the sort of kind of geopolitical drivers that were occurring. So, when I look at it in terms of, looking at, the FX markets, primarily those are the markets I like to operate in. And I look at what I can do in terms of my takeaways from 2019. And it'll be part of my own sort of thorough debrief that I do every year, towards the end of every year, spend a bit of time over the Christmas, the holiday period, just sitting down, just reviewing my trading, reviewing, my own analysis of markets, reviewing where I made good decisions, reviewing where I made poor decisions. What were the elements that I can learn from that? Okay, were there elements, were there things that I particularly missed? And I have to do that just like every other trader. That's the way that you trade well going forward, and it's important part of any kind of end of quarter, end of market, end of year review into terms of how you're looking at. So, I've taken here just a little snapshot from one of my own kind of spreadsheets that I put together. Because, within FX markets, I'm always looking to sort of try and see, buying strength, selling weakness. That's my strategy. Very, very simple. Okay, I have lots of different tactics how I look to employ them, but my overall strategy is in FX markets, I want to buy strength and sell weakness. That's what I'm looking to do. So, I have my own little model, my own little spreadsheets that build just an idea to give me an idea of the season that we're in. And I think of it like a season, okay? So, we have a season of, this year we've had a season of like dollar strength, which has been very consistent during the, for the vast majority of the year up until the last couple of weeks. We also saw a lot of Japanese yen strength in Q2 of Q3, and people say, well, why would that be, Paul? Well, my view would be that was, at that time, that is when the sort of China-US trade deals started to come off the rails a little bit, starting talking about tariffs being put in place, and so invariably there was a flight to safety, okay, and that flight was into the safe haven of the Japanese yen, so that's why we saw that strong in Q2 and Q3. And as we now see that, as we'll look at in a moment, as we see that perhaps the phase one of the trade deal is all done and dusted, well, invariably then there's a flow out of the Japanese yen, okay, as we start to get a risk-on mentality within the markets. Along with that, we saw, sterling weakness, okay, in Q2 and Q3 of this year. And why was that? Well, that was pretty much down to Brexit and Mrs. May, okay, and failing to complete the Brexit process, and then invariably sort of doing very poorly in the European elections in May, and then invariably her standing down and being replaced by Boris Johnson, and the market's initial thoughts about that, which were very sort of negative against sterling. But interestingly, what we've seen is in kind of Q4, kind of from sort of from October onwards, really is that sterling has suddenly grown from strength to strength, and that's what we're looking for. And as I said, I'm just looking to basically sort of buy strength and sell weakness. That's it. I like to try and keep these things as simple as possible. I just point in there. Okay, that's my sterling there. Okay, and you can see there in the green. Okay, since October. Okay, that's just. That we've had, sterling has been number one, whereas actually only as back in August, okay, we could see sterling was 8th out of 8. Okay, it was the bottom of the pile. But now, what we're seeing is invariably is that sterling is strong, and actually we've been seeing weakness in the euro pairs, but also we're starting to see it in the yen. The yen is getting. We'll find this week the yen will get weaker and weaker, and that is because we're starting to get a risk-on mentality. Okay, as we feel that that China trade deal is done, the phase one, so there'll be a risk-on mentality, and that will mean that in FX markets, what we'll see is maybe a swing towards the kind of risk-on currencies and a swing away from the kind of risk-off currencies. And, as you said, the Commodities was quite a mixed picture this year. The Commodities, if you're completely new to trading, looking there at the Canadian dollar, the Australian dollar, the Kiwi dollar, it's a very mixed picture. They're very much tied to the sentiment to, what's going on in China, okay, and because of the commodities that they export to China. So as we have seen kind of, as we've seen, phases where the US-China trade talks are going well, and they're all very optimistic and positive, that has reflected well, for the most part, in those Commodities. And subsequently, when there have been periods of real worry and real concern, that has had a knock-on effect onto the commodity dollar currencies. In terms of, just a recap for the indices, well, as I said earlier, we saw that, US indices, they hit all-time highs this year, okay, which is just fascinating, considering all of that sort of geopolitical tension that has been running amok within markets. US indices, they just ground their way higher, okay, in particular, looking at the Dow Jones, the S&P, and the NASDAQ, they just ground their way to new all-time highs. What we also saw with the Europeans is that the FTSE was in Brexit limbo, and we're going to look on that in a little bit more detail in a few slides' time. But also, the DAX was, despite what sort of, let's say, some of the fundamental news coming out of Germany itself, the DAX, from a very poor starting position, has actually had a very good year. And so we'll look at that in a bit more detail at the moment. But DAX, relative to its starting position of the year, has done very, very well. But it has not pushed to all-time highs in the same way that the American indices have, and we'll touch upon that in a further moment. And we also saw struggles there within the kind of the Chinese A50 market. All right, it's not a market I personally trade myself, but I do keep an eye on it as a bit of an insight and an indicator into a look at sort of kind of sentiment either in China or towards China, and that has had a bit of a struggle. Struggled at times, once again, based upon how well the US-China trade talks were going that week. So that was a quick recap of where we were for 2019. Let's have a little look at, what are our options going forward? Okay, what are areas that we could start to have a little bit of a look at? Well, the first one we're going to talk about is, it's the big one for the FX market, is really looking at the US dollar. We're looking for, in the new year, will we see new yearly multi-year highs, or are we finally rolling over? So what we've got here opposite, you can see in this chart, let me just bring up my drawing tool here, is that, this is the dollar index, okay? Dollar index on a weekly chart, okay? So sometimes called the Dixie, okay? DXY, okay? Here you'll see it on the, it's on the Admiral market, MT4 and MT5 platforms. And what I've got is a weekly chart. And what we can see is, really from kind of the mid here of kind of 2018, after a spurt at the start of 2018, for pretty much 2018, 2019, we've just been sort of grinding our way north, okay? We were just, not the most exciting of trends, not actually the easiest of trends to trade, but it has just literally just ground its way kind of north, okay? It's just, as you can see there, it's just ground its way north there, okay? And that's what it has. It's just been grinding. It's just been demonstrating dollar strength. Now, the challenge with that is that, if you're new to trading, that you'll realize that, commodities and debt are priced in dollars. So when we have a strong dollar, that means your commodities are becoming more expensive. That means your debt is becoming more expensive. And that, of course, can be a problem. And that has been a problem for quite a few Latin American and emerging market economies like South Africa, etc., and Turkey. Whereas invariably that has had, that strong dollar has had a particularly difficult problem on that. Mr. Trump himself, he doesn't want a strong dollar, okay? He believes that a weakened dollar would invariably help with the US exports, which will invariably help with the US economy. And it's his aim to make America great again by putting America first. So we have seen, as I said, despite everybody wanting a weaker dollar, the dollar has continued to just grind its way north. Or it had done up until the last couple of weeks. And this is where we start to take a bit of an interest. And this is where we start to get curious about how could that have an impact and help us next year in our trading decisions. What we've noticed is that, as I said, price has just been grinding its way up, okay, grinding its way up here. But a couple of weeks ago, into in the Q4, what we had here on the dollar index is, what I would view is, this was a double top reversal pattern, okay? It was a double top on a weekly chart. So it doesn't, patterns like this, they don't happen very often. But when they do, I start to sit up and take notice of them. They were both the candles had, lots of wicks to the north. There was clearly a lot of selling pressure there. And what we also noticed is that, the kind of 50-period moving average, which is the red moving average here, had acted as, quite significant support, okay? And we'd seen price fall away, okay, to the 50, bounce up, but actually it formed now Now what we've done is we'd formed a lower high. Okay, we've formed a lower high, and some people might even say that was a bit of a kind of a head and shoulders pattern there, but it was just it was just effectively a case of a lower high after a double top reversal pattern. And what we've been looking at, and actually prices moving on even from when we speak here, it's almost like the weekly 50 period moving average is acting almost like a line in the sand. Okay, it's like acting like a line in the sand. And for 2020, what I'll be looking for is to see, well, actually, will price get beneath it and hold? Will it then come back up and test it? And then could it actually sort of move its way down? That would be kind of interesting. That would have an impact. Remember, dollar is dollar's the main reserve currency of the world. Okay, it's the main traded currency. So if we would see a weaker dollar happening, okay, and certainly into Q1 and Q2 of next year, what kind of knock-on impact would that have against all of the other major currencies like sterling, like euro, like the condols, also the Swiss franc, and and the emerging market currencies as well. So if I was you, I'd be adding that to your watch list. Okay, you can trade the dollar index, you can trade the dollar index directly, but my view would be sort of adding that to your watch list to take to lay a look at it. And if that 50 period moving average does not hold, okay, and if price actually, as I said, gets beneath it, holds beneath it, starts to trend down away from it, well then maybe we'll start to see the start of a new trend in the dollar, and that, as I said, will have knock-on impacts across all of the other major currencies as well. Well, then, in terms of FX, well, we're going to move across to sterling, okay? We sort of said a few slides back about how all that kind of Brexit confusion and delay, of course, all the issues there. But, what we have is, whether people like it or not, we do have clarity now at the moment in the UK. Mr. Johnson won a strong majority, okay, in those recent elections, and that pushed the sterling up on the exit poll. Sterling had been strong all through Q4, but we had a little bit of a bump and a move up there, okay, especially when we had the exit poll at sort of 10 o'clock on Thursday London time, and then invariably, once we've seen that Mr. Johnson was not only winning, but he was winning with a very strong majority, okay, a majority of around about 80 seats, which basically gives him the opportunity to sort of drive through a very how should we say, a very strong sort of legislative program there. That's as I said, people like certainty. Okay, so whether you like it or not, the UK has certainty. It also means now the UK will definitely be leaving the EU on the 31st of January 2020. So now what we have is, as I said, there's a little bit of clarity, okay? And regardless of whether people are for or against Brexit within the UK and Europe, there is now an element of clarity. And it might be said that one of the reasons markets bounced, okay, and bounced higher on the exit poll results was that invariably markets were more worried about Mr. Corbyn's sort of Marxist agenda. They were more worried about that than they were about Mr. Johnson's Brexit deal. Okay, and that's one of the reasons why we got such a strong bump there on the Thursday evening. So in terms of like the UK, in terms of sterling against the US, perhaps it's its major currencies it's trade against in terms of US dollar, in terms of euro sterling. It may well be that over the next sort of Q1 and Q2 of 2020 that we might find ourselves drifting up towards a kind of 135 to 140 range in the sort of pound against US dollar. In terms of euro sterling, if we continue to get sort of challenging economic data out of Europe, well, then, it would not surprise us to see that euro sterling continues still to weaken, okay? And euro sterling may drift down towards 0.8, okay, in sort of the 80 cents region. And that will actually, I believe that will actually help the Europeans. I think that's what they will be looking for in terms of in their terms of driving, because invariably, the stronger sterling comes against the euro, well, the more the sort of cheaper European exports to the UK will become. So invariably that will help them in that way, and so I believe that there won't be too many endeavours by the ECB to sort of support the euro. I think they will want a weak euro against the sterling. And on the flip side of that, well then, having looked at sterling, well then we're looking at, well, is the FTSE itself, okay, ready to break out from a bit of that Brexit malaise, okay? So once again, what I've got here is the weekly chart, okay? We've got the period separators here, okay? So here we go. So So, we've got, this has been 2019 here, okay? Apologize for my my drawing there, okay? As I say, every week I'm a better trader than I am an artist, so I apologize for that, but hopefully you'll be able to sort of at least sort of understand what we're looking at here, okay? So, realistically, from about the start of 2017 to where we were about, just around about the area just before the election, well, you can see that, yes, there have been some swings, but effectively the FTSE 100 has not really gone anywhere in those 3 years, okay? Yes, we've had some cracking swings to the upside and to the downside, but if you had just bought the FTSE on at the start of January 2017, well, 3 years later, okay, you'd not be overly impressed because you're not really gone anywhere, right? So that makes investors are not happy. But what we see is that that means that the FTSE has been trading at a discount to the rest of the world's equity indexes. And so with the clarity gained from the victory last week, well, then invariably that means that there's a confusion has been mostly removed, and what we've already started to see was we started to see kind of Brexit start to move up, okay, on Thursday night, and since then, in terms of reflecting that kind of new element of confidence, okay, you're going to have strong parliament with a strong majority. The last 3.5 years of sort of just bouncing around, sort of getting nowhere with parliamentarians, where things are going to change, things will happen, things will hopefully happen much faster. And with that in mind, and that basically what we'll see is that gives investors a certain level of confidence in the UK. And so invariably, we have seen over the last few days a bit of a push up from that, okay. And maybe we'll see, because that FTSE has been sort of slower, delayed behind others, maybe that will move faster as it looks to catch up with its indices brethren. Talking about indices, brethren, well, here let's have a little chat about the DAX, okay, the German index here. And if we look at, once again, we've got the weekly chart here opposite, and this is where we started 2019, okay. So late 2018, okay, we had a really strong sell-off in the DAX. We'd had after this double top here, okay. We had a double top here, followed by a lower high, followed by a move down, okay. And if you're sharp, you'll just remember that's what I was actually just talking about, what we may start just seen on the dollar index chart, a few weeks ago. But the DAX, okay, having sold off strongly in 2018, well, relative to where we started 2019, it has been a very good, strong year for the DAX. We can see it's been particularly strong move up there, and this is despite kind of the numbers are being quite challenging on the sort of German economy. And part of me would be saying that it's a case of US indices, the strength that we've seen in there, okay, there's pretty much dragged most of the world's equity indices up along with them in terms of sort of correlation with the algos. They're literally just very, very closely correlated to those American indices. And so now we're kind of in the question of, will Brexit clarity, will a passable deal, will that actually help or hinder the DAX? Would that provide the opportunity for for DAX to attack those recent all-time highs, okay, in terms of putting in a new high, or will uncertainty over the German economy and Brexit, will that invariably sort of cause the market to sort of to roll over and fall away? And I think an element of that is linked to the kind of relationships that are built between the UK and Europe as the UK leaves the European Union, moves on to sort of identifying a trade deal, and also that if US indices continue to track higher, especially in the year running up towards the sort of US elections, whether that kind of continued momentum within those US indices will follow their way through into the DAX. And what we also want to look at is gold, okay, ladies and gentlemen, right? So we've had here new multi-year highs ahead, or is it becoming a bit of a fading hedge? So once again, what we've got here is we've got a kind of gold chart, okay, on the weekly chart here, and we can see that last year we had a good particular run down, followed by a retrace. But actually, as we got into later on this year, we had a real strong move up in gold. Now, part of that, as I said, will have been gold being used as a bit of a hedge against the US-China trade talks. But also when we had issues in the Persian Gulf over the summer, that saw, a real big sort of strong move up there, as you can see, in terms of gold. And gold got back up above 1,500. And, I was looking to see, hoping that it would hold above that. And if it based above that, then I'd be interested to see would that continue. But what we have seen is that over the last few weeks, as, there's been maybe some element of clarity on Brexit, maybe as we've seen the phase one trade deal sort of, be completed between the US and the Chinese, as we have seen tensions in the Persian Gulf sort of deflate. Well, that has been the kind of little bit of the sort of the, let's say, the kind of the lust for gold has kind of faded away. And I'm watching this now as, looking at is this a little bit of a bullish flag pattern that is perhaps being built here in gold on the weekly chart. My own view is that, if the US-China trade deal gets done, gets sealed, okay, then that will take off the kind of maybe the need for the hedge of using gold as a hedge. But on the flip side, I'll be keeping an eye on to see, whether that has an impact on, if US indices start to falter next year, in the sort of as markets kind of get a little bit bored of the kind of seesawing. Well, then will gold then start to take on once again a bit more of an exciting and be an interesting option for both traders and investors. So as I said, at the moment, that's just a little bit of a kind of a flag pattern building there. So as I said, add that to your watch list at the moment. That's what we'll be kind of keen and interested in, and we'll be working to see how that links into sort of moves across the indices and FX markets over the next 1 to 2 quarters. So there you go, ladies and gentlemen. In terms of conclusions, all right, 2019 provided many opportunities for the well-prepared trader, and 2020 is going to bring more of that same. If you're educated and prepared, then that allows you to participate in markets from a position of strength, all right? And that's what we, throughout the whole of the Trading Spotlight series, that is what we've wanted to sort of get across to yourself, okay? That by being educated, being prepared, that allows you to participate from a position of strength. So what we talked about is the US dollar has been strong, but we're looking at, are we getting the signs that that story is ending and that we may get a new sort of weak dollar trend for 2020? The UK elections provided clarity for both sterling and for FTSE, and that was going to give us some interesting moves over the next sort of 6 months, the next Q1 and Q2 of 2020. DAX has had a great run this year, okay, from its starting position. Now we're going to watch, will that move, will that push towards new multi-year highs? That's what we're going to be taking a look at. And will that, any kind of change in the sentiment on the German economy, that might actually help with that. We had a look, gold had a great run in 2019, okay? Had a great run. There was some really strong move. The question is, what would need to happen for that to continue, okay? Would there be sort of, increased tensions back in the Persian Gulf or between the US and China? That would all invariably have a particular move on terms of gold bulls, or will actually, as the market sort of view the US-China trade talk as a trade deal as a good move, will that kind of take away the sort of the need for gold as a particular hedge? So we're going to have a little look at live markets in a moment. So just as always, as I say, you want to join the Trading Spotlight community on Traders Yard, you can do. My colleague has sort of he's put in the chat box there. Okay, there's a link there, so you can get involved. We enjoy having everyone come and join us and pass their opinions. So we're great, and my colleagues Marcus and Jens, put in some fantastic resource and information there. As always, don't forget to join us next time, okay, this coming Wednesday, where my colleague Marcus is going to talk to you about how to learn how to find your perfect trading style, and in particular, swing trading versus day trading versus scalping. He's going to talk you through what's the most popular trading styles, the pros and cons of each particular trading style, and also, most importantly, how do you know which style is best for you? So that's at 2 o'clock London time this coming Wednesday, December 18th. And as always, you can check your inbox for the webinar link or sign up on the Admiral Markets website. And as always, there's some fantastic analysis and education tools there on the admiralmarkets.com website. And if you have any particular questions, if you're watching this now or if you're watching this later on demand, you have particular questions or you have particular ideas that you'd like to see us cover, we're always keen to hear and to hear from you. And you can contact us there, hello@admiralmarkets.com or youtube.com/admiralmarkets or facebook.com/admiralmarketsglobal. I hope you found that useful. That's given you just a little bit of food for thought. Okay, we've got a few minutes here, so if you just want to stick with us, ladies and gentlemen, I'll switch across to the Admiral Markets MetaTrader 4 chart, and we can have a little look at some of those opportunities in greater depth. So Plarman, there's this huge amount of useful info. Thank you, Paul. You're very welcome, Plarman. Okay, we try to help you. We want to make you educated and prepared for next year. Balder says thank you. You're absolutely right. You're very welcome. You're very welcome indeed. But as I said, if you just stick with us for a moment, I'm just gonna try and switch across to the here we go, to the charting package. There we go. Excellent. So I am hoping that for the last couple of minutes we'll have a little look. Here we go. Now I'm hoping you can all sort of see and hear me there still. Okay, I've got on those particular charts. Just look at that. So we of course we looked at a few of the elements there as we in our talk there. But and we talked about this is just indices here. But I said here's the China index. As I said, it's not one that I particularly trade myself, but I certainly keep an eye on it. Okay, I certainly like to sort of keep an eye and see what it's telling me. And what we can see here is that. In the sort of China index, okay, this is the weekly chart. You can see that we've some people might see that as a little bit of a sort of an ascending triangle that's kind of been getting built there, okay, and maybe the sort of deal with that will allow that to happen. There you go. But it's having had a strong run up. Then we've just sort of really concentrated in into that kind of wedge there. So we'll be looking to see what kind of implication that has, all right, as the pronouncements for the first phase of the deal as that starts to trickle down into the markets itself. We can also look at the kind of Australian index here, the ASX. Okay, so this is just a weekly chart, and of course I'm sure many of you will have, like me, seen the kind of terrible footage of the Australian bushfires that have been going on there. It's quite alarming there to watch and such. But despite all of that, we can see that despite all of the let's say the hangover from the US-China trade talks, the Australian index has once again it's just ground its way up there. Okay, it's just grounding its way up to the all-time highs, and I'll be looking at, could we get a push through there? Okay, maybe towards the end of this year, maybe into the start of next year. Okay, just a push to new highs. Okay, for 2020. So just to add that to your watch list in terms of a space to take a look at. And as I also said, the FTSE here. Well, we can see here in the FTSE. You can see that even since I created the charts on Friday night, okay, in 48 hours we can see that the FTSE has just it has jumped there from where were we there? Okay, 7278, okay, 7278, okay, on sort of what would have been kind of sort of Thursday as we've gone through there, okay, and we're up to 75.27 there, okay. So we've just jumped there about 250, about 250 points there, okay, on FTSE in the last sort of couple of days. That's quite big moves for FTSE these days. So that's looking at, is that just going to continue, okay, and sort of just pushing that. It's got a lot of room to make up for compared to the sort of the other equity indexes that have gone on. I know that some people are little bits of traders of cryptocurrencies, Bitcoin. Okay, here we started the year off. Here, look at this, it's 3,500 level. We had a really great run there. Okay, lots of people very happy with that. Then we had this real sort of UTB 1, 2, 3 double top formation, and we've kind of rolled our way back down. And once again, a little bit like that dollar index chart, okay, that 50-period moving average is kind of acting like a little bit of a line in the sand at the moment, okay, a little bit of a line in the sand. I talked a couple of weeks ago about how, the power of the 20-period moving average, price had dropped, then it pushed up again, and, it failed to get back up above the 20-period moving average, failed to close back up above the 10,000 level, and price has just rolled its way down there. And now we're trading down there around about 7,000, okay, so from being at 13, just under 14,000, down to sort of 7,000. There's been quite some drift there over the last few months, and once again, that kind of 50-period moving average, I see that as a little bit of a line in the sand for myself, because if it really doesn't hold and it breaks, well, then we might be back down to that 200 there, around about the 5,000 mark, which would be a fascinating return in terms of fascinating swing up and swing down that we'll see in the last 9 to 10 months. So there you go, ladies and gentlemen. I hope you found that useful. Thank you for joining me for the Trading Spotlight series over the last 6 months. So it's been a pleasure to actually work with you. I wish you the very, very best of success in your trading for the remainder of 2019. And I look forward to you joining us to make 2020 your best possible year as a trader. And as I said, I wish you the best of success in your trading endeavors. And I look forward to speaking to you in 2020. Many thanks.